Hello friends. So hope you all are doing good. Myself Pawan Jaiswal from MarketSmith India. And market is volatile and choppy from the last few days, mainly because of this global uncertainties and geopolitical tension, and that resulted into a sharp surge in crude oil prices, and then impacting global market. And obviously crude prices have more impact on Indian market, so Indian market are also facing volatile. So today is 17th June. Uh, I'm here to discuss some interesting data points for technical perspective as well as news perspective, that how market is looks like at current point of time. So let's discuss. So TraderSmith, you can see as website is here. You can go here, you can go log in and have a trial or subscription where we provide a short-term trading strategy in the market according to market condition. So let's move directly on market to discuss about how it is currently placed. So this first thing is that I would like to share that market direction as per O'Neill methodology. So you know that O'Neill methodology, we categorize the market on broader market indices in that confirmed uptrend, under pressure, correction, and rally attempt. So here if you see, it is clearly evident that almost all major sectoral indices as well as benchmark indices either trending into confirmed uptrend or uptrend under pressure. So if I talk about benchmark index, so Nifty is confirmed uptrend, but BSE Sensex is in a little bit uptrend under pressure, but that is need not to worry. Currently it is in consolidation. Apart from that, FMCG and auto are the only major index which are trending into uptrend under pressure, and otherwise all rest indices are trending into confirmed uptrend. If you see other things like performance in the last few weeks and months, so clearly it is visible that from the last 1 month, 3 months, our Indian stock market and various sectoral indices are really doing good. But from the last 1 week, there is some volatility elevated because of this geopolitical tension between Israel and Iran. Even though last to last week there was a surprised rate cut by RBI, and market was showing quite attack. Market was showing quite a bullish trend, but because of this, now market has again turned into sideways zone. So if you go on chart, so one thing is clearly visible. This is the Nifty 50 daily chart. So one thing we can see here, that technical point of view, this range, this particular that I am drawing a horizontal line, and that range is approximately 24,500, So from the last almost 1 month, I can say, or 4 weeks, I can say, it is clearly taking support around that. And in upside, it is roughly taking resistance in the range of 25,100, So more or less, I can say from the last 4.5 week in the market, this Nifty 50 is trending into sideways only. And that range is 24,500 or 400, I can say, to 24,500, 400 to 25,000, 100 to 200. So this is the range where market is moving since last 4 weeks, and it is still, even last week also it tried to clear that 25,200, but it failed again. And it now again it has entered into sideways because of geopolitical tension, and then again took support, and still it is in that range, I can say. So one thing is clearly evident, that currently market is in sideways from the last 4 weeks. But if you see little bit broader picture, so broader picture is still positive. If you see the weekly chart, if you see the other indicators, momentum and everything on high time frame chart, so everything is showing positive trend only. But daily charts are showing little bit of consolidation. And I think in last video also I have clearly mentioned this level, because it is clearly visible from here that this was the supply zone. If you see, I have drawn a line here. Market was started falling from recent all-time high, that is 26,200, 300, and this was the range from where there was some gap down opening happen and then retake, and after that the clear cut downtrend started, like you see here, like started. But now after base formation and double bottom formation here, this is the double bottom formation you can see here. After that there is a clear cut rally happened. So I can say after this double bottom formation, this is the first phase of rally that is almost finished. And because of this, I can say, and because of this supply zone area, this index is taking support resistance around 25,000, 25,200. And this particular level are clearly mentioning on our various reports and various videos that this is the level to watch. Unless and until it will not cross 25,200, we cannot expect further bullish trend. And suppose it will cross and hold above that level, then we can expect at least conservative level of 25,700, 25,800. And once it will attain that level, then again we will review that what is the situation at that time. But currently situation is like this, that it is in sideways, and unless and until it will not cross that 25,200, it will remain traded in sideways only. So this is one part that is on bullish side. Then what about if it will not cross and remain traded, and one day it will breach downside? So in downside, it is clearly evident that this 24,500, 400 is a very strong support area from emerged in the last 1 month. And suppose it will breach, then there is a 200 DMA, and the 200 DMA is placed around roughly 24,000. So that is why I'm expecting this 23,900 to approximately 24,000 kind of zone is another range of support. So suppose it will breach 24, 500, 400, then maybe next leg of correction may extend to 200 DMA plus minus 100 to 200 points. So I'm not denying for that. But overall market, overall undercurrent is bullish. So I'm still expecting that sooner or later that it will cross 25,200 and it will go beyond that level toward 25,700, 800. But let's see how things will improve in coming days. We can wait and watch only and just trend with the market, trend with the flow. So this is the current scenario in Nifty 50. If I talk about Bank Nifty, so Bank Nifty, if you know, last time this RBI policy because of rate cut, there was a clear cut breakout happened here in this particular zone, because from the last almost 1 and 1.5 months, this Bank Nifty was facing strong resistance around 56,000. And last week when this rate cut happened, surprising 50 basis point rate cut, there was a breakout happened, but because of again geopolitical, I can say it has again entered into that sideways. So now it is clear that in upside resistance is 56,000 followed by 57,000. So unless and until it will not cross that level, technically it looks like it will remain traded in sideways only. For time being, sort to midterm perspective, that I can say this is the failed breakout, and now again stock has entered into that particular sideways consolidation. Another thing is this trend line you can see here that I have just drawn in front of you. So unless and until it is holding this trend line, or I can say this orange color line, that is 50 DMA, if it is holding, that is placed around 54,500 kind of zone. So unless and until it is holding that level, there is need not to worry. We can consider this market as a sideways correction. Otherwise, the moment it will breach maybe 54,500, then only we will start thinking on negative. Otherwise, we are expecting that this is the phase of consolidation, or sooner or later it will pass. Good thing is that be it Nifty or Sensex, this both indices, though both major index of Indian market is trending into higher top higher bottom formation kind of thing. If you see Nifty, still it is higher top higher bottom formation. If you see Bank Nifty, still higher bottom higher formation. And the way rate cut and liquidity push happened from the RBI, maybe sooner or later this banking financials are taking lead the stock in the market. So maybe it will remain in buy on position in coming days and coming weeks also. If you take a little bit further larger picture in Nifty 50, so if our analysis is not wrong, so maybe by the Diwali this year 2025, or maybe the end of December, maybe possibilities are quite high that this Nifty 50 may register fresh all-time high. Possibilities are there unless and until it is holding 200 DMA. So, and maybe this banking sector will lead the rally again, like it is leading from the last couple of months. So sentiment is positive in banking. Another this space, this IT space, I can say, this Nifty 50, Nifty IT index is literally now showing positivity from the last few weeks, I can say, and it has given this downward sloping trend line breakout on daily chart. If you draw a trend line here, so it has clearly given trend line breakout, and now it is gradually it is moving toward this black color line, that is 200 DMA, currently placed around 40,000, 40,200 kind of zone. So at least that kind of level we can expect in IT index. Apart from that, if you see this reality, still currently it is in sideways reality, pharma, FMCG or energy. But overall sentiment and trend is bullish. Structure is bullish, I mean to say. So if structure is bullish, so this consolidation is just a, I can say, time-wise correction or price-wise correction is the part of game. And maybe sooner or later it will, everything will be sorted out, geopolitical, political, domestic, international, everything will be sorted out, and then the market will find its own trigger for going upside or downside. The way sectors are emerging, the way stocks are emerging in the market, maybe most probably possibilities are still quite high that maybe it will go breakout in upward direction only. But only whether it will give or not, that time will answer. We have to go or we have to flow with the market direction. What are the things you can focus in this current scenario? Then that is the most important thing. So you can focus sectors where this positivities are returning and there is a strong positivity rally. You can focus on banking stocks, especially private sector banks and some PSU stocks. PSU banking stock. IT is literally currently doing good, so you can focus on some IT stocks like Tech Mahindra or Infosys, etc. If we talk about reality, so there are some real stocks from reality stocks which are also doing good. FMCG is showing currently mixed picture, but it is in consolidation. The moment it will go breakout, so maybe this positive momentum will emerge in that. So apart from that, if you see get current market scenario, so these defense stocks are really doing good. Fertilizer stocks are coming into flavor. So you can focus in all these stocks in current market scenario, and where positivities are returning instead of catching the falling knife. I would not suggest to catch the falling knife. Instead, where positivities are returning, you can manage your risk and start trading in that particular sector or particular stock. So obviously you have to be remain vigilant and cautious in current time of consolidation, but still positivities are there, and most probably we are expecting that sooner or later after this phase of consolidation, upside breakout will happen, and then maybe more opportunities will be there. So I think in this video that's it for now. We will again meet you in next video for fresh market analysis. Stay tuned with us. Thanks for watching this video.